interesting for people to look at a credit report. So what is credit scoring? This is the second part we're going to talk about, and I'm going to read this. It says the use of a statistical risk assessment model. It's an algorithm which uses consumer reporting agency information, so the way that each of the creditors reports to the agencies, to significantly increase the level of predictive power to determine good payers from bad payers. So if you're a creditor and somebody wants to borrow money from you, it'd be good for you to know if the people that were wanting to borrow money from you were good payers or bad payers. And you can see on the chart down below, it's got a scale that in the green and light green, it says excellent credit. That means they're good payers. It's got good credit. They are good payers also. Bad credit is determined, and it's kind of like the beauty is in the eye of the beholder. Some people on this chart that are considered bad credit for another program or for another set of eyes might be good credit. And then you see the thing that all credit card companies fear the most is bankruptcy. So this is, I think, a good depiction, but I'm going to be a little more refined here. We're going to talk about specifics because some of the different bureaus, or not the bureaus, some of the different lenders and the types of programs that they run, whether it's conventional, FHA or VA, have different criteria. And what's good for somebody might be bad for somebody else. That's what I wanted you to see. Okay, so we'll move on. So what is a credit scoring? So kind of in that same flavor we just had, now I've put some numbers to it. And you can see if your FICO score, this is a FICO score, this is not the consumer credit scores that is so easy to get. There is, just an FYI, there's a big difference between a Vantage score and what the mortgage industry use for credit scoring. For that matter, there's also a difference in what the credit reports and the credit scoring that's used by car dealers is different than what a mortgage company would use. And the reason is because they're different entities. We don't look at all the same criteria, and they're going to be different. So excellent credit, if you're 760 or above, you are excellent. 700 to 759, I mean, that's very good, very good. 723, that's what they're telling us right here, is that's the median FICO score. That means that most, or the people, that's right in the middle of where people go. That's what a medium income or medium FICO score means. 660 to 699 is still considered good. 687 is an average FICO score. And there's a whole thing we could talk about the difference between medium and average, but it's somewhere between 687 and 723, so that should give you a good idea. Now, on this chart, it says from 620 to 659 is not good. Well, again, beauty's in the eye of the beholder. 580 to 619 is poor. And then finally, 500 to 579 is very poor. And what we're going to find here is that this scale is inconsistent with the way that the mortgage credit criteria is for some of the major lenders out there. FHA, where if you're in the 620 to 659, that's pretty darn good. I mean, you can get a loan there. If you're in the 580 to 619, it's not great, but we can still get a loan in most cases between those two ranges, assuming that you can jump through some of the hoops that you have. So let's go on to the next one and see what. Okay, so I did this. I'll go to the next one. All right, so now I'm on to conventional guidelines. This is a conventional loan is non-government. When I say non-government, it's kind of sort of government, but it's considered a private mortgage entity out there. And so what they have their own mechanism. If you remember that other one that I sent you before, it had different numbers on it. This is conventional numbers. 740 to 850, they're measuring risk. And if you're at 740 FICO score, they figure you're at no risk. They're at no risk by lending to you. At 720 to 739, you're a slight risk. Not much, but there's a slight risk there. At 700 to 719, there's a small risk. 680 to 699, medium risk. 660 to 679, a risk. and then 620 to 659. They'll make loans to you, but it has to be very specific. And really what I tell people when you're doing a conventional loan is you want to have a minimum of a 660. Now here's the rub. As your FICO score goes down, your credit score or your interest rate goes up. So obviously when you're in the 740, you get the best rates. As you drop from a 720 to a 739, the rate's not, I mean, it's pretty good, but it's not quite as good. And then each little 20 points down you go, the rate gets a little worse or goes a little higher. So it's just real important that you understand how sensitive these are. And if we're at 719, then our 699 is probably the big one. When you go from 700 to 699, we want to do everything we can to get your score up over 700 because it makes a difference on the rate. So hopefully that makes sense. And then FHA credit guidelines, well, this is a risk graph similar to the other one, but the numbers are different. The box is bigger, if you will. And if you're at 680 to 699, they don't consider that any risk whatsoever. If it's 660 to 679, slight risk. 640 to 659, small risk. 620 to 639, medium risk. 600 to 619, it's a risk, but they still do them. And then 580 to 599, huge risk, but under the right circumstance. And this usually means that you're putting more money down on a 580 to 599 score. Harder loan, definitely a harder loan. These are hard. When it gets to 620, that's when it's a very easy loan. So one of the things that I want you to take away from that is that the credit scores, a lot of people consider this bad. If you look back at one of our original charts, 620 to 639 was what somebody considered bad credit. Well, I mean, it's good for us, and the rates are decent too. So one thing I also note that the criteria for rates moving up and down, the interest rates for FHA loans are more aggressive or lower than conventional rates, particularly on the lower levels. So that's something that's a benefit or a positive for FHA. The negative is the way that they treat their upfront mortgage insurance premium program. But that's not for this time, that's for the next time. Okay? So that one, there you go. If you wanted to call me, that's the number to call me right there, 281-348-9899. Again, you can email me or you can go to Homebuyer Webby and check that out. Or you can go to my Kingwood Mortgage Guy site and check that out. If that's, let's see, there's some questions on there. I think what I'm going to do, I'm going to stop the recording and then I'm going to answer those questions. And I want to thank you for being on tonight, and I hope you have a great day. Talk to you soon. Bye-bye.